company PFEW SmartPetz, and now I am happy to pass this presentation along to my Chief Financial Officer, Jake.
Hello, fellow shareholders. My name is Jake. I'm the CFO of SmartPetz, and I'd like to welcome you all to our annual stockholders meeting. First of all, I would like to tell you our strategy, which was a luxury marketing strategy. We picked this strategy because we wanted to avoid the high plant capacity addition prices and to avoid extra overhead. Now that you know our general strategy, I would like to pass this meeting on to another member of our financial team, Jared.
Good morning, shareholders. I'll be going over the income statement. So throughout the operation of our company, we determined that we were not only able to operate without borrowing more money, but we were able to pay off some of our loan as well. However, during the fourth quarter of our second year, we took out a $60,000 loan due to low interest rates to keep cash flow high. Now, throughout our first operating year, we focused on investing in both advertising and product development. Through these investments, we managed to maintain high product perception, and this led to a breakthrough in our product technology. During our second year, we also started to favor quality management, which also increased the perception of our product. As a result of our constant high-quality products, we cornered the luxury market, resulting in increases of return on equity and stock price. In order to improve our retained profits, we would continue to increase plant capacity while demand is high, which would cut down on the lost sales that we have been struggling with to stop. Occasionally, we increased our price because demand was so high, and we found it more profitable to raise our product an extra dollar rather than to increase plant capacity by several thousand units. We hold the belief that our second year was more successful than our first, as we were able to get a better sense of the market and our investments from our first year start to pay off. However, without our investments and decisions from the first year, we would not have been able to have such a successful second year. Now, a couple of challenges that we faced included proper communication with each other, often producing various opinions, which led to discussion and debate. If it weren't for the shorter amount of time allotted, the further we got along to make our quarterly decisions, we could have been debating all night. Ultimately, though, we were able to come to an agreement, and we ended each quarterly decision as a team. Another minor challenge we encountered was being able to use market research most efficiently. A couple times, we thought cutting off the research was a good idea, but it conflicted with you, the stockholders. Following the messages of disappointment, we made it our mission to make sure we deliver what our stockholders wished. To go over the balance sheet, Devin.
As you can see, according to our balance sheet, our assets, liabilities, and equity increased across the board in year 2. We utilized a loan, which increased our liabilities while simultaneously increasing profits. As a result of this, and our increased spending in all categories, our assets and equity increased. In order to grow our retained earnings, we first invested in the quality, sophistication, and perception of our product to justify our higher price point to the consumer. As we entered our second year, our product was higher quality and perceived as such by the consumer, so we focused more on expanding and maintaining our customer base. We could have increased our equity by continuing to increase the amount of units produced and capacity to produce, since we were very capable of selling large amounts. Additionally, we would have paid out larger dividends. I'd now like to introduce Zach to discuss some of our management decisions.
Hello, my name is Zach Peters, and I'm the FP&A manager here at SmartPetz, and I'm going to discuss with you the decisive management decisions that we made as a team that ultimately led to our success. So, as you previously heard, we went with the luxury marketer strategy and gradually increased our price from $38 to $40. Now, a very important aspect of this strategy is making sure to maintain a very high quality product. Therefore, we invested a large amount of money into both product development and of course quality management. This allowed us to reach the pinnacle of quality. We received a quality award in year 2, quarter 3, and had a product breakthrough around the same time, which increased our sales. Finally, our product perception was the highest in the entire industry for quarters 1 through 4 in year 1 and year 2. Alongside this, our market share was high relative to our price point. Put it in perspective, our market share didn't drop below 28.5%, and it was often around 30%, despite the fact that our price was over $3 higher than our nearest competitor and $5 to $10 higher than our second competitor in our industry. Ultimately, the idea of analyzing our competitors' decisions and creating opportunities for ourselves based on what we learned proved to be an invaluable resource in staying ahead of the competition. Another indicator of our success is the fact that we retained profits even during a time of recession that occurred in year 1, quarter 4, and kind of had lingering effects throughout the beginning of year 2. Even though it was a little less, and that explains our ROE decreased by about 4%, we still maintained an ROE above 20% in year 2. And yeah, so next, another important decision that we made as a group was to utilize our loans when the Federal Reserve dropped their interest rates to almost 0%. We determined that we could utilize and leverage our debt and in turn make more profit on every dollar than what the interest rate would cost us. Therefore, we invested into plant capacity additions. This was needed to minimize our lost sales and also to maximize our return on equity for both the shareholders and for our company. Now, some other important things to take note of are the fact that we made sure to keep our cash flow above $400,000 at all times, just in case we were to encounter an unexpected loss. Also, we kept our debt to asset ratio well below 1, even though we were taking out loans for capital investments, such as the plant capacity addition. Overall, our company has had tremendous success. However, we have taken some serious risks. As previously mentioned, we did struggle sometimes with deciding how much market research to pay for. And we invested a lot into product development, even during a period of economic recession. However, by the end of year 2, we have learned as a group collectively to make small risks that still have a great economic reward and make sure that we're limiting the potential adverse effects. Throughout these 2 years of production, we've had to deal with many external factors, such as changes in our competitors' decisions, varying inflation rates due to the recession, and finally, a fluctuating economy. As previously mentioned, we had a recession towards the end of year 1. However, we managed to stay on top through the successful implementation of our strategy, our use of capital effectively, and finally, the adaptations we made as a team to grow together and make improvements. Thank you. Next, we have Shrav and Angelina with our common stock analysis.
Hello, shareholders. We are financial advisors and are here to present you our stock analysis over the past 2 years. To begin with, our financial team worked to maximize the return on equity by increasing our net profits. Our ROE in year 1 finished at 25.17%, as shown on the graph. As for year 2, the ROE was 22.2%. Furthermore, our company SmartPetz experienced a decline in ROE at the end of year 1 going into year 2 because of the minor recession. Due to our overall high ROE, we also had increasing stock prices. Our stock prices in year 1 finished at $27, and in year 2 finished at $47. The economic recession primarily caused a lower stock price at the end of year 1. To discuss dividends and EPS, Angelina will now take over.
Thank you. Another aspect of our financial decisions that positively impacted our stock price was our dividend policy, in which we would increase dividends as our profits increased. Furthermore, when our profits remained stable, we stayed consistent with our dividends. We truly value our investors, and were able to show this through paying dividends that were 5 to 10% of our profits retained. The only exception was quarter 2 of year 1, where we withheld from paying any dividends because we predicted that the profits would be insufficient to do so while maintaining a financially stable company. Next, we are moving on to earnings per share. EPS represents how much money a company earns per share. Throughout the 2 years, we increased our EPS by maximizing our profits and ensuring that we didn't go past the point of diminishing returns by experimenting with investing various amounts in factors such as quality management and product development. But we altered our investment approaches if we noticed no significant changes. The success from this strategy is clearly shown as our EPS increased from $1.33 at the end of year 1 to $2.80 at the end of year 2. To conclude, I would like to bring this back to our CFO, Jake, to present you all with our future financial plans.
In addressing future plans for our company, we would like to increase our plant capacity as sales continue to rise, increase the price to meet rising demand and inflation, and continue paying off our bank loan. We will make these moves by using our retained profits to pay for these additions. After learning about our company's finances and the future of our company, we would love to hear if you have any questions for us. If not, our team thanks you for your time and interest in our company.
What other things do you think you could do to increase ROE?
Well, I think right now, our sales are increasing. We still have a little bit of lost sales in the end of year 2, just because we didn't have enough cash flow to really maximize our production capacity increase, and we want to make sure that our efficiency remains between 85 and 95% in our facilities. So I think the next plan is really to just expand. Our cash flow is increasing. I think we're projected to have $600,000 to use, and we're probably going to add at least $3,000 to our capacity, and this will increase our profits by every extra $1,000, increase our profits by $20,000. So that's something that we have in mind, and then raising the price as well, since the demand is so high. We pay for market research. It says that the economy is trending up. So we're going to make sure that we keep meeting demand and expanding our business that way. And that should maximize profit and therefore increase our return on equity.
Thank you. Enjoy the rest of your day. You're done.
Okay, thank you.
Thanks, everybody. Good job.